Good evening, everybody. All right, we're going to start out a little bit tonight on a topic that some people are interested in, which is kind of the breakouts. And we'll start out with the wedge breakouts. And this is just kind of a common technical analysis. But wedge breakouts are very profitable in the sense that you can identify when a wedge is setting up. You can see where the trading is starting to get thinner and thinner and thinner until it breaks out one way or the other. Basically, this is what you consider a falling wedge. And the advantage we have as candlestick investors is we can see what type of signals or patterns are occurring that take you from one end of the wedge to the next. And it becomes a lot more simple to identify a wedge based upon identifying the signals that occur. I mean, when you start seeing that there's a wedge pattern setting up, you become more cognizant of the what's happening at the bottom of the wedge channel. And what we're really looking for is when it comes to a point, which way do they break the move, up or down? So this is a rising wedge. This is kind of a horizontal wedge. And you can see how the investor sentiment is getting compressed until it breaks out one direction or the other. So if you're trading any of the major stocks and you can see this wedge formation, then you can notice when there might be a change of this wedge. Notice that they didn't pull it all the way back to the bottom of the at the support level when they did the bullish engulfing signal right off the 50. Telling you there's probably a little bit more excessive strength coming back in. And once it breaks out through this level, that tells you this compression is over. You get a good quick pop to the upside. So anytime I can see it's getting thinner and thinner, I'm waiting to see which way they're going to break it. So this is a very easy, identifiable pattern setup in the sense that when you see that compression going on, we can see there was a left-right combo right here that broke us out. And that puts us in situations where there's a much higher probability that there's going to be a big price move. So this is all part of that trend analysis. And why is trend analysis important? Obviously, if we're looking at things like the Dow, NASDAQ, and S&P 500, we want to know which direction to have our portfolio oriented into. And a lot of people will say, well, why do you use the Dow? There's only 30 stocks there, because two reasons. It's a good indicator, number one, of what the big money is doing. And two, it only takes 5 seconds to analyze each screen visually. So in 15, 20 seconds, you can see which way the Dow's going, the NASDAQ, or the S&P 500, which basically you either have an uptrend and waiting to see whether they break the bottom of the uptrend, or if you have a downtrend. So obviously, if you have a downtrend, you're more oriented towards scanning for bearish signals. So if we're in a downtrend, obviously we want to be scanning more for the bearish stocks. And if we're in a sideways trend in the market, we may have both long and short positions. Now we know prices move in waves. Usually a wave 1, wave 2, wave 3, and same thing in the opposite direction. The most important indicator, though, is the T-line, the 8 exponential moving average, with a very simple analytical tool that says if you have a candlestick buy signal or close above the T-line, you can pretty much rest assured you're in an uptrend as long as you don't see a sell signal and a close back below the T-line. All right, and also, it's pretty important whether you're in a trend channel, but we've got the benefit of seeing where the buy signals occur and where the next buy signals occur, if it's right on a support line, or where the sell signals are occurring at the resistance levels. So this all becomes important as your first criteria for analyzing whether you want to be going long, short, or whether it's time to start thinking about, if that fails here, making a little bit more diligent analysis of each of the long positions to see if they're going to start backing off. So when you have these support and resistance levels, you got the benefit of analyzing when a trend channel is going to break. So if we're watching Netflix with this type of chart panel, or trend channel, if it opened lower and started trading lower, what did it tell us? That they finally broke out of this trend channel and it's time to go short. We're seeing something like this as a trend channel, and they break down through it, it's time to go short. So trend channels are very easy to configure. So anytime we can draw a line through two tops and you can see it's moving in a certain direction, you can draw a parallel line and that becomes your trend channel. Does that work exactly? Well, doesn't matter. Once we get down here to the resistance or the support level, we can start seeing what type of signals are setting up. And when they start back up again, we can see where these signals are occurring. Right here, when you extrapolate that line out for the top of the trend channel, because investor sentiment has truisms that once we get up to a resistance level, we can identify what type of nature those signals are. In this case, you can see the tails to the upside that we're starting to see indecision right at a level that everybody else is watching. We're getting ready to take profits. Or you start seeing some of your long positions starting to get soggy. You start taking profits, and what would be your next criteria? If they happen to move it back up through this level, that tells you there's a new perspective of what's going on in the market trend that you can buy right back in. So if I can draw a line through top 1 and top 2 and come down here and draw a parallel line, I'm starting to watch in this area to see what happens and see if I'm seeing buy signals. If so, and you're in the oversold area, you're seeing buy signals in the oversold area and on a trend channel support line, yeah, it's a logical time to start closing out any short positions and going long. Where's the next prospective target? If we extrapolate the top of that trend channel line out, we start watching in here to see if there's going to be a resistance. When we see a bearish harami in the overbought condition and that far away from the T-line, what do we start looking for? See if they start confirming to take it back to the T-line. If they do, what's that tell us about the top of our trend channel? They failed, and they're starting back down to the bottom of the trend channel. So at that point, that was our target. Once again, you can identify the 200-day moving average had a doji. They hit right on the bottom and started back up the next day. Morningstar signal, and remember the magnitude of the strength of a Morningstar signal, the further it closes up above the halfway point of this candle, that tells you there's a major change of investor sentiment. You add the factor that it closed above the T-line. So when you're looking at all of this, this is what we call convergence analysis. Got a Morningstar signal, a doji that just bounced off the 200. They couldn't really close it below the bottom of the trend channel. They closed it back up above the T-line with a big Morningstar signal. Logic says we're starting back up again. So anytime you can start drawing a trend channel, you can identify where the selling starts and where the buying might start. So when you extrapolate this line out, what are we looking for down here? Look at all the indecision in the oversold area. If you were short, what's this telling you? It's time to start taking profits. So the support and resistance becomes very important in the sense that we can identify where we should be looking a little bit more aggressively for covering short positions or looking for buy signals, and then kind of extrapolate what is our next target, usually back up to the top of the trend channel. So this becomes very significant, especially if you're analyzing what you should do with your portfolio. The signals work just as well in the evaluation of what the major indexes are doing as they do in individual stocks. remember, any trading entity that you're looking at, candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. There's our evening star signal and a close below the T-line. There's our morning star signal, bouncing up off the 200-day moving average. There's our uptrend, staying above the T-line until it closes back below the T-line. Just telling you now it's time to start going short. So if we can identify whether there's a sideways channel, this tells us right in here that a new dynamic has come into the price or the thinking of that move, whether it's a trend channel or a wedge formation. We're looking for the breakout one way or the other. Trend channel. There's our best friend, doji gap up through the resistance level. That gives us a high probability setup that we're now breaking out into new territory. If there's buying and we see a sell signal right about the same level as a resistance level, where's our next likely target? Right back down to the bottom of the trend channel. Now, will it get there? The probabilities, or everybody else is watching it, that's kind of the thinking. But as a candlestick investor, we have the advantage of seeing what the graphics are telling us, that if it goes in this direction, we'll stay short until we see it get to this level and or until we see that next buy signal. So the nice thing that we're working with, obviously, is one of the most consistent indicators in the world that works time and time again, and that's human emotions. So anyways, that's kind of the information on breakouts and the wedge breakouts. And as a matter of fact, we've got kind of a little special on our wedge special breakouts, which is... Oh, Becky, do you have the link? It's giving you, there's the link. It's just giving you for $17, you get an ebook with the charts and graphics of what happens as far as wedge breakouts. I'm not sure if the $17 also gives you a free access to the website if you're a non-member. Becky, I'm going to... sound is going in and out. That may be me hemming and hawing, Joseph. All right, I'm going to shut the this down for a second, Becky. All right, so this is what we're going to kind of concentrate on now is the dumpling top tonight. Dumpling top's your opposite of your Frypan bottom, where you can see how you really couldn't trade this one way or the other until you get over to this side and we see the big breakdown starting your downtrend. So we'll get into that. First, let's take a look at what the markets were telling us over the last few days. For the last 10, 12 trading days, the Dow was trading positive. And the Japanese rice traders gave us statistics a long time ago that the most likely situation is somewhere between 8 and 10 positive trading days, you'll start seeing a reversal. So the closer we kept, or the longer we kept going up, notice the type of signal we had yesterday, where we had kind of little dojis on the way up in the Dow. We had a long-legged doji that traded lower in the Dow. It opened lower yesterday, and then today it even opened lower again. It opened lower yesterday and traded up. It opened gap down today and traded the opposite direction. So essentially we had that long-legged doji, bearish confirmation, even though it hit the T-line and bounced up a little bit. Today with it gapping down, kind of creating that bearish kind of trend kicker signal, told us the bears were taking control with great enthusiasm. Same scenario on the NASDAQ. The NASDAQ was trying to come back up, but again, had that long-legged doji. That was kind of the signal to say, all right, something's gotten very weak in this market at the end of that day. Next day they opened it lower but brought it back up. But here's one of the most compelling things to identify was that they didn't get it back up above the T-line. And then today with it gapping down, kind of doing a trend kicker to the downside, that's when your selling started. It was identified right here. Yes, Rick, same thing. So we'll get to the dumpling top here in a second. Let me take a look at a few of the, let's see, CLAU7. You can see the crude oil with a bearish engulfing signal today is starting on its way down. We've been trading the live cattle short. Why? When it sold off, you had kind of this pattern, and then look what happened. They turned it back down, so you had a bearish J-hook pattern. Where was your next likely target from up here? Back down to the 200-day moving average. Gold was getting stronger. That might not be the right chart. Gold, as you can see, is in a bullish J-hook pattern, still trading higher, making things like Nugget also starting to trade higher. And where is Nugget right now? Let me do this with a little bit of right about here or right about there. That if they start breaking it out, where do you think the next logical target is? Up here. So that's going to give you a few days of bullish trading. So gold obviously is going to be trading higher with the fear of the market selling off. People are moving back to gold a little bit more. So again, the most effective pattern right now is our dumpling top. As you can see, it's kind of a slow rounding top, and then whenever you see this type of thing where you have a doji gap down, that's your bearish best friend. That confirms that you're going to be in a downtrend. Last week, as you know, we recommended shorting PI, because the more you're in this dumpling top, the higher the probabilities you have the big move to the downside. Not necessarily meaning they're going to gap it down, but start getting strong moves to the downside, because, as you can see, the bearish sentiment is building up, and then when it breaks the beginning of the pattern, that's usually when your big price moves occur. That was the exact reason why we also recommended going short on Chicago Bridge. Kind of a dumpling top, little gap down here, never got back up above the T-line. So these are the type of setups that you can get into where you're either shorting the stock or even buying the puts and getting big price moves to the downside. WAR, you can see how once they got below the T-line, they slammed it, that rounding top. We're watching BPMC right now. Notice how it's done a little bearish J-hook pattern, dumpling top, weaker trading here. Could probably take this right down to the 200-day moving average pretty quick. And there's a few more that are kind of illustrating that same scenario. QTM, dumpling top, big 40% move to the downside today. And door, dumpling top, you become very comfortable, or should be very comfortable, that once it gets below the T-line, that you're in a dumpling top. These are the returns you could expect. So a dumpling top has a characteristic bobble in the middle, of a Frypan. Yeah, sometimes, but more convincing is this big rounding top. Yep, like dropping a boat anchor. Okay, so the opposite, obviously, is something like a Frypan bottom that might have a dimple in it. So even in a bad market, your Frypan bottoms are still going to work effectively because this is the accumulation of some investor sentiment building up for some reason, which probably has nothing to do with the overall market conditions. So there's your Frypan bottom with the prospects it could be breaking out to the upside. Explain stochastics on the short side. Well, usually, again, if you're getting ready to short something, you usually want to see the stochastics in the overbought condition with a sell signal. But if you're seeing a pattern like a dumpling top or a slow curve, your stochastics are probably already going to be in an oversold area. Just as in the same sense that in a bullish pattern like a Frypan bottom, your stochastics are probably already up in the overbought condition. So there's two simple factors. If you're looking at a candlestick buy signal, it's usually going to occur when your stochastics are in the oversold area. If you're looking at pattern breakouts, usually your stochastics are going to occur in the overbought area. Same with the opposite. Let's see, it wasn't Logi. What was the? Oh, CC. CC. You're looking for sell signals. There's your evening star signal, which kind of gives you kind of a little mini scoop, berry scoop pattern. Well, you can see the evening star signal and the bearish doji sandwich. Kind of the opposite of your McMuffin. You got a bearish McMuffin. There's PEGA, PEGA, bearish dumpling top, big move to the downside. So PBYI. This was a little bit more choppy, but this one was attractive because even though it didn't look like it was a very big move here, that's a big percentage move over the last few days. All right, so some of the biggies right now, I mean, we already saw the weakness coming in. When Amazon had the gap down, and now it's got the slow curve. We're right here at a support level. If it opens lower, they could be taking Amazon all the way back down to the 200. Apple had a very clear indication, and this is a very simple process. If you're in an uptrend and you're in the overbought condition, where should this not trade at all? Shouldn't trade back below the open of the previous day. The fact that they gapped it down and started heading in that direction told you, get your stop in there very quickly, because if they came down through there, where do you think your first likely target's going to be? Down here to the T-line. So just tells you the probabilities are starting to go against you. What else do we have here? The J-hook pattern is still working in something like Hertz. Strong move to the upside. Remember where they downgraded it? Right here. This is the exact reason why you don't listen to one specific analyst or brokerage firm or anybody out there, because they downgraded it. There's your Morningstar signal. There's your J-hook pattern. They downgraded this, yet it's now trading back up above where they downgraded it. let's see, BAK. And here's the opposite. Here's the J-hook pattern setting up. And this is why we always say you want to watch to see what happens at this level. Because once they've failed here, what do you have? Instead of a J-hook pattern, you've got a double top. That means they're still selling this off, that now your next likely target is coming down here to fill this gap and probably heading for the 200-day moving average. Let's see. So in this case, do you get out first anyway for HEZ after the downgrade because it's below the T line and then get back in? Yes. On something like Hertz, we know that probably the knee-jerk reaction is going to be that they're going to take it down. So you close it out. Not that there's been a change of investor sentiment, but you're more cognizant of when the buying comes back in, and you get right back in again. Let's see. All right, so a couple other things that we had going on. A lot of people say, do you hold going into earnings? Not if they were reporting earnings tonight at 4:30 on NVIDIA. You already had a dark cloud. They held above the T line, but going into the close today, they were selling it off. Now, what you've got to really kind of analyze what's going on in the markets is the fact that people that probably are much closer to the company, analysts that are watching it, they are now making up their minds or assessments of whether the earnings are going to be good or not. And so usually you've got a good feel for whether they like what they expect later on, or they don't like it. When they were selling this one off 737 today, if they had great earnings and guidance, I thought I saw that they were trading down here at 153 after hours. So apparently they must not have been as great as what everybody was hoping for. But the fact that they were selling it off prior to earnings told you to get out. Anytime you see a situation where you're closing back below the T line, close it out. The prospects are that things are heading in the wrong direction or the right direction if you're a bear. So anytime you see a situation, again, here was a perfect case where we were at the breakout level, and what happened at the breakout level? We have a bearish engulfing signal, pretty much telling you they aren't breaking out. If you didn't close out the position here, you definitely close it out on a lower open, because once they start trading below the T line, again, the probabilities are much stronger that they're going to start trading to the downside. There was only a few stocks today that showed any resiliency on the upside. SGMO, bouncing off these series of dojis right here off the 50, came back up. If you need to go long something tomorrow, even if the markets are opening lower, that's got the prospects of going higher. Crocs also had a good, strong day. And notice what type of trading day it was coming off of. There was that slow curve, and then a big breakout day through this level. It tells you there's a new dynamic in that trend. VRTU. Also, there's your J-hook pattern after your bullish engulfing signal, bullish trading. Those are the ones that are looking good, but you got others where you probably want to start going short on Wayfair. Yeah, notice you had your evening star signal, and now you've broken through the 50. There could be a lot more downside to this one. AKAO, various J-hook pattern. had the bounce up, bullish reversal, and failed the T-line. So you might have wave 1, wave 2 going into wave 3 at this point. CC, again, that had not only your evening star signal scoop, berry scoop pattern, but today it formed that doji sandwich, bearish doji sandwich, telling you there's prospects of more downside. Labu, same scenario, bearish J-hook pattern on a big breakdown. We recommended, I think, did we recommend going short on NBR? There's kind of that slow curve. Get ready to short this one also on weakness. COTV was another one that can be shorted. There's your best friend, big sell-off. They tried to bring it back up, but then they started bringing it back down below that level. That told you the bears are still in control. So you also have a bearish J-hook pattern in progress. So it did low G. Bearish pattern, slow curve to the downside. This one has the prospects now of wave 1, wave 3 being approximately down to the 200-day moving average. And ENTG, there's your signals. Shooting star, left-right combo. You stay short until you see a buy signal. All right, so there's been a lot that have been giving us the prospects of big drops when the market started turning over. So right now, like we always kind of look for the bullish engulfing or the bullish Frypan bottoms on the upside. We're also looking for that dumpling top breakdown on the downside, making for some very good shorts or buying the puts. All right, so are there any general questions on candlesticks? If not, I'll take some individual stocks. Everybody just do one at a time. We're running a little bit behind schedule tonight. Okay, so Home Depot had been in a slow uptrend until today. Now you've got a bearish harami. Makes this very simple. If it opens lower, they're at least coming back to the 50 or the T-line. So if it opened lower tomorrow, I would definitely be taking profits. VNTV, just stay long. ATOS, same scenario. This was right at a breakout level, but it opened positive and did a dark cloud. So that's telling us if this opens lower, you close out any long positions, even though it started off with a nice cradle pattern. It's telling you they're still in the trading range. You probably want to move your money out of there. Hudson, this is your message. Something popped this big, but there's profit taking. So all you can do right now is as soon as you see the profit taking is over by seeing a candlestick signal and buying, you can start buying at that point. That was kind of the same scenario on Apple. When they first popped it up, they brought it back until the selling was over, which was illustrated by a bullish harami and bullish confirmation at that point. IPXL, big positive move. Yeah, you can stay long on this one. At this point, if I was going to buy in positive trading tomorrow, I wouldn't want to see it close back below the halfway point of this candle. Under Armour came up and failed at the T-line and this downtrend. You get ready to short this one with the prospect that's coming back down into this area on further weakness. Facebook, I would have been out of this one today. You can see what the trend was. It had kind of a little wedge formation setting up, and they broke to the downside. Now it's got the possibility it's going to come back to the 50. Silver, still in a positive mode. Gold, same scenario, in a positive mode. Micron, get ready to go short. You can see the bearish J-hook pattern setting up, making the next target the 200-day moving average. McDonald's. Ooh, that's a toughie. PNC, all right. Left-right combo, but again, you're in the trend channel, so your upside potential could be back up to the top of the trend channel, which means if you like it, you can be buying it. Just not going to make you a whole lot of money. MTUM. Yeah, looks like you can get ready to go short. That's the momentum factor. Yeah, you can be shorting this one. Let's see. NVIDIA bought puts 2 weeks ago. Thought being that it had to fall between now and September. All right. Holes. Stay short. You can go short if it opens weaker tomorrow. If it opens positive, I wouldn't be long or short. If I was short, I'd be covering my short calls or short position. If it opens positive, yeah, I'd be covering the short position. PACB, get ready to buy this one on positive trading tomorrow, but definitely only on positive trading. LYV, another message type day. You can buy it on positive trading, anticipating it'll be a 45-degree to the upside. COHR, get ready to short this one if it opens lower. Your bearish J-hook pattern would be in progress. EXEL, you've got kind of a wedge formation setting up. At this point, I wouldn't be long or short. Suns has to open positive tomorrow. You're still coming up off the kicker signal. Yeah, it just definitely has to stay positive. And do falling, rising, or horizontal wedges go in a specific direction, or either way, up or down, depending on which way the market makers make it go? Yes, they go either way. All you have to do is identify which direction it broke out of, either the top side or the bottom side. The euro started trying to start back up. If I was going to go long, I still would want to see it close above the T-line. PE wouldn't be long or short. Nothing here. Apple, we did. I'd have been out of Apple today. I wouldn't necessarily be going short, but I'd be out of it. Coffee, big breakdown. Get ready to go short coffee. DXCM, another one you get ready to go short on the failure of coming up through the 50 and closing back below the T-line. RWM, breaking out of a Frypan bottom. You just stay long on this one. Tesla, getting a little bit soggy in here. Now you have to watch to see what it does if it comes back to test the test the T-line. And deer, big sell-off. It's not a very exciting price move in the first place. And this is a case where safety factor would have been having a sell stop just below the T-line. INGN, get ready to go short on weakness tomorrow, failing at the T-line. Yeah, the 3 T-line is that green line. Oh boy, this one's a toughie just because of the magnitude of movement that it's had over the. It looks like they're doing a little bit of buying, so very speculative. You can start buying this one if you like like playing with those stocks. O'Reilly's, get ready to short this one on weakness. Again, you've got a downtrend, the same thing as an uptrend. Downtrend, they break it out, they bring it back up to the trend, and then they start drifting it off again. YPF, nothing exciting there. Probably wouldn't be long or short. If I was at anything, I'd be short until it closes up above the T-line. Kara, nothing. It had the big pop-up and then did not confirm. Wouldn't be long or short this one. We did Amazon. Goog, stay short. Another one that has a prospect of going to the 200. The biotechs, same thing. They're all selling off. Stay short on the biotechs. CLVS, notice the kicker signal. You stay short until you see a buy signal. Western Digital. Came down and right now hit the 200. So now you watch to see if they start doing some buying at this level. If you're short and it starts trading positive, close out the position. COVR not found. Weight Watchers are still in an uptrend. Ever since your best friend signal, you stay long. But now you're in the overbought area, so your safety stop should be at today's open. I don't know what Bitcom is. Is this it? No. I don't know what the symbol is for Bitcom. Chem has to stay above the T-line to stay in it. Wynn Resorts, get ready to short this one on weakness. Ethereum, ETC, I don't know what that is. U.S. Steel, probably wouldn't be long or short this one right now. No direction. FedEx, just stay short on your slow curve, bearish doji sandwich. Prospect of coming down to the 200-day moving average. JP Morgan, nothing there. If you're anything, you've got the bearish trend kicker. You can short this one, but it's not going to move around all that much. AutoZone, get ready to short this one on any weakness. Royal Caribbean, probably wouldn't be long or short this one. Just not enough direction there or signals. CAVM, stay short. Notice how it broke this little support area today when it stays short. I don't think I can get those symbols up here, MT. Okay. All right. So observe the obvious. The obvious was we had a big reversal signal right here, our long-legged doji. Gap down, and then another gap down, trend kicker to the downside. They could be coming back to the 50, which could kind of correlate with this wee little gap right here. All right, one more, CCJ. Get ready to short this one if it opens below the 50 tomorrow. Okay, I would be looking at your the potential shorts, ones that haven't already moved big but have the potential, something like a dumpling top that if it opens lower tomorrow, you start shorting immediately. Not any real longs. Now, I wouldn't be in anything long right now. The only longs that looked like it had anything going for it was SGMO, but that isn't really anything dramatically exciting. Okay, I'd say, Becky, you want to put the link in for the $17 special one more time? With this volatility, are you ready to buy another classic car? How many do you have now? Bill, I'm down to about 16. I've been selling a few just so I have some room in the barn. After a candlestick signal, confirmation is needed. How do I determine confirmation so I can enter an order? If you're looking at a bullish signal, your confirmation would be, all right, where would this need to trade? You definitely wouldn't want to see it open down here. That tells you the bulls aren't there. You probably want to see it trading here, and maybe tomorrow for safety factor, you want to see it come up through the high of the day. Okay, thank you everybody for showing up tonight on a nice summer night. We'll see everybody in the chat rooms. We'll see you then.